Good morning, guys. Welcome into a new week, new developments. Waiting the tweet from Trump, major tweet, major announcement. We already got some breaking news. And big hello to YouTube viewers who are just joining, XM beginner room viewers. Let's start the session, which is devoted to weekly market outlook. But of course, before that, we should address what's happening in after the weekend in the broader markets. So I just see $20 down gold. Suddenly, what's happening here? Maybe some news. Really, this was a sudden drop in gold, guys. 3 minutes, boom, $20. Uh, of course, going over the weekend, we had and look, probably we got some kind of breaking news. S&P ups, gold down. Definitely, there was some news right now. Probably some kind of announcement. U.S. to lower tariffs in China, implement base 10% plus 20% fentanyl levy. Joint statement released by the U.S. and China. Guys, you see imminent move. I use this opportunity to exit from the long position on S&P. Of course, buying the dip. That will be in consistent with the previous buy the dip scenarios starting 2 weeks ago, right under the gap over here, ADP buy the dip and buy the dip, higher lows altogether. Going for the weekend with some risk, but you see, sometimes you have to take risk, especially if you take position before and you have a buffer of safety, right? If you just gamble for the weekend, maybe news would be good, maybe news would be bad. You never ever know. So here we go. US, you just started the session, guys, and we get breaking news 4 minutes ago. That was something. Look at this S&P move. 70 points in just 2 minutes. 70 points. Gold $20 just in 3 minutes. I just managed to get back into the short position gold that I covered and coming back just before the announcement. So it was a good idea. And now, right now, holding to short gold. No time to buy right now, probably because we got a breaking news, which is moving the market. So definitely, before we go into the weekly outlook, we have to address what's going on after the weekend. And this is just happening, guys. We got opening up lower in gold. We got also opening gap higher on S&P. I was talking about a correlation, right? The negative correlation, gold and S&P or U.S. equities. Let's have a look at that. You can always check on correlation. Correlations, they do change. Correlations, they do change. So let's see what they talk about gold after the weekend. Gold slipped over 1%, hitting a one-week low as optimism over U.S.-China trade talks dampened demand for safe haven assets. Officials from both countries concluded discussions over the weekend, signaling a positive outcome. Beijing announcing plans to launch formal negotiations, Washington highlighting progress toward a deal. And we also have the geopolitical front, the India-Pakistan ceasefires. Two positive, very positive pieces of news. Ioannis is here. Big hello to all XM viewers. Question from Ioannis. How you predict a weak gap is very possible. You knew, guys, that going for this weekend, we were going to have negotiations and probably some outcome out of it. Of course, there was a risk of a gap up or gap down, right? But recently, the line of least resistance for S&P was to the upside, guys. This was the line of least resistance that was going on for 2 weeks already. And I mentioned a breakout over here. This was on a statement from Trump that was showing you on that Wednesday, also last week, that the tariffs would substantially go down, U.S.-China tariffs. From that time on, we got a bullish sentiment kicking in with stocks. Even ADP and GDP number here was the buy the dip. And then going for the weekend, the line of least resistance was to the upside. Of course, you might have a gap down here if negotiations went bad. But this was the Trump statement 2 weeks ago on Wednesday, 23rd of April, that tariffs would substantially come down. We know that he might change his mind, right? But we have to lean on something. And especially if you go on the weekend and if you have a long position S&P and you have a safety buffer, I didn't expect that the S&P would drop 200 points, right? Even if it dropped 70 or 100 points, still that probably would be the buy the dip scenario. Idea 2 weeks ago was that the worst is behind us. Worst is behind us, and that was the statement from Trump talking about tariffs being substantially high. So here we go for the weekend, and we got a gap up, and right now I see S&P still going up. But I use this as a short-term opportunity to exit from long position and buy the dip. Still, it is ahead of the U.S. session. If we have any pullback, that will be buy on the dip. Definitely, I wouldn't go short this market. This is just a fresh piece of news, and markets feeding on that. And as we said previously, S&P still got a long way to go to previous historical highs, and German market did historical highs already. Did historical highs already today, guys. Is breaking into new highs. Bullishness, German market continues, and I think that might be happening as well for U.S. equities gradually. VIX is coming out and coming down. VIX, which is the fear index, we're talking about when it was 27, 30, and idea was that will be gradually going down into 20s, maybe even below 20s, which is the mean for the VIX. Was 16, then became like 20 something, but eventually VIX usually goes down. This is the main feature of VIX. The VIX is going back down into its mean. So we got a mean over here, we got a mean over here. Of course, the risk is that in the meantime, you can have those spikes. That's why if you trade VIX, you should take that into account and don't take too leveraged positions on VIX. But if VIX is too high, that would usually go down, right? Of course, if you take it prematurely on the short side, the risk is that we'll be going up 30%. So you shouldn't use the margin. Even 2-to-1 margin is big when it comes to VIX, especially when you try to short it at low levels. But if you short it at high levels on the way down, that's already a little bit different story. So you see VIX is gradually going down. I started with that gold and showing the correlation US 500 or US 100, the negative correlation. So whatever good news for stock it is, it's bad for gold. And you see it clearly. Let's go for 1 month just to highlight that. Especially last 3 weeks. We got a tariffs news, which was feeding gold and also feeding S&P, but in opposite direction. And you see that this correlation is very valid. Green is gold and blue is US 500. Pretty clear right here that we're talking here about negative correlation, right? The news that started to push S&P 500 up on that premise that tariffs are too high, as I mentioned, Trump interview. Also, Powell stays in the office. This was also the development on 23rd of April. Send gold down, S&P up. From that time on, we see something like a negative correlation, and especially here you see that S&P is pushing higher and gold is pushing lower. So sell the rally on gold. It is, we continue. And then buy the dip on equities. It is, we continue in that vibe, in that tone. At the same time, US dollar index is gaining a bit. Again, the major headlines here, this is from early morning. Dollar rises after Treasury Secretary Bessent said the U.S. made substantial progress in trade talks with Chinese officials in Switzerland during the weekend. The U.S. and China are set to give more details on the talks Monday. Greater clarity on what the two nations have agreed will likely be needed to give markets the required confidence to say the peak trade uncertainty and tit-for-tat tariffs are in the rear view mirror, right? So the worst was behind us, and now it's confirmation. It's becoming more official. Gold dropped $25 just in 3 minutes. Actually, a little bit more, but initial move here on gold, 1 minute was $20, right? Now it extended intraday loss to $32 and still under pressure. So probably gold at the short term is trying to get back into this 3,200 level, and there will be a potential target overshoot that. Probably, I think we might be seeing very technical structure here, gradually going back into this level here, which would be a big bull flag, and later we'll see. At that level might be around 3,170. So still, guys, this is a strong momentum on gold happening right now to the downside. We got possibility of this A, B, C wave, A, B, C, and probably have to go with that sentiment, selling the rally on gold. Can we close the gap on gold? I don't think so. I don't think so. First, the gold didn't have a bigger correction for some time. This is just a small correction happening right now. Even if you look at the size of this correction from perspective, it's a 6% correction. 6% correction. Recently, we got something like 9% correction. And you remember 20% correction was gold was traded 2,000, 2,100. We got at least 3 corrections going into 18% or so. Let me go into that. Probably was over here. Yeah, we got 19% correction, and we got a 20% correction, and also the 10% correction. Right now, a correction of 6% after this huge move up here on gold. Definitely, it's still very small. This is very small correction. You can go easily 10 or 15% from historical highs, especially now when the sentiment is feeding gold to the negative side. Previously, we got a geopolitical, Middle East, tariffs. Gold got an exuberant move, huge move here from 2,970 back into 3,500. It was huge move, $500, and now it's giving away only $250 right now. So I think lots of potential on the way down for gold. So definitely, this is the falling knife, guys. Gold is down right now, not much. Or when you look at this gap, you think, okay, it's a big gap, right? But that will be like, what, 2%? Slightly above 2%. And we know that gold is volatile, right? So the volatility in gold continues. All right. So definitely, I would be careful about catching this falling knife, guys. We had the bullish market, right? But now maybe we start to have bearish market, right? Maybe start to have bearish market, sell on the rally environment until we got in a very nice support, 3,150, another $100 down. And I will be very cautious about buying that gold. And you see, if you are buying today this gold, you have the new intraday lows, right? So what you can do, you're gonna close. I mean, you're gonna hold on to that with expectation that it will start to go up. It's better to wait for US session and see some kind of short-term capitulation on the way down. And then when prices start to go up, maybe go with it, with momentum to the upside. So we buy when prices go up, and we sell when prices go down in the short-term momentum. So US session probably going to see even more abrupt or more wild moves on gold. And probably the main headlines today would be the tweets from Trump and also the continuation of details on tariffs. Economic calendar, and this is our beginner room session, weekly market outlook. Today, nothing really from economic calendar. So Monday after the weekend, market is really looking into the major tariffs headline, right? So we don't have anything on economic calendar. Normally, this Monday session, we look at the economic calendar and try to figure, okay, what will be the main driver? And we got something, guys. We got something tomorrow. Of course, it will be overshadowed by tariffs news. You don't need to worry about India, Pakistan right now. The ceasefire last week, there was lots of question about the potential gold going up on the India, Pakistan. We were talking that might be just local, like Middle East, local. And now even that local conflict looks like it's fading away, and we have news of a ceasefire, so which is again bearish catalyst for gold. What we got here, Tomorrow, employment situation, UK, dollar is stronger, so pound is losing a bit today, not much. And of course, inflation rate. Core inflation rate, this is the major market driver tomorrow. And when it comes to inflation, United States, recently, it's not coming up.